So what happens to a trillion-dollar empire when its legendary founder, its guiding light, finally steps back? Well, today, we're going to jump forward in time to the year 2026 to explore that very question. We are diving deep into Berkshire Hathaway in the very first year of a brand new era. You see, after 60 years at the helm, the one and only Warren Buffett has officially gone quiet. That means no more of his famous annual letters, no more of those marathon Q&A sessions at the shareholder meetings. And look, this isn't just a simple retirement. It's a really calculated, strategic move to empower the company's new leadership and prove that Berkshire can thrive without him in the spotlight. And that brings us to the absolute core question of all of this. Can an institution that was so meticulously built by one single genius, can it really thrive under a new, more systematic approach? Let's find out. All right, first up, the Oracle goes quiet. We're going to look at the immediate aftermath of this historic leadership change. This was anything but a sudden move. The succession plan for Greg Abel, well, it's been in the works for the better part of a decade. So when the day finally came, January 1st, 2026, the market barely even flinched. We saw just a tiny dip, which basically signaled that Wall Street had already priced in this transition and was now in a full-on wait-and-see mode. This shift in leadership, it really represents a fundamental change in philosophy. We're moving from the Buffett era, which was all about personal intuition, those famous handshake deals, to the Abel era. He's known as the hands-on operator. His approach is way less about prophecy and much more about process, a culture of trust but verify. So what does this new leadership actually look like in practice? Let's get into Greg Abel's playbook. Because, let me tell you, he did not waste a single moment. And his first moves, they reveal a really clear and decisive new strategy for Berkshire. Abel proved he is a CEO of action from day one. Seriously, on his second day on the job, he pulls the trigger on a nearly $10 billion acquisition. Then, he keeps up the strategic reduction of that massive Apple stake to free up capital, and he signals a willingness to correct past mistakes by getting ready to exit the underperforming Kraft Heinz investment entirely. And that first huge move, the OxyChem deal, it wasn't just a big purchase. It was a masterstroke of strategy. Think about it. It vertically integrates a key supplier for other Berkshire businesses, it secures a top producer of essential chemicals, and it even helps strengthen Berkshire's other massive investment in Occidental Petroleum by letting them pay down their debt. It's a win-win-win. Abel's approach to the portfolio, it's all about pragmatism. Selling down Apple isn't a bet against the company, not at all. It's about rotating that capital into assets like treasury bills that are generating these huge, safe returns. Cutting Kraft Heinz shows a discipline to just move on from past mistakes. And meanwhile, that big bet on Japanese trading houses has been a phenomenal success, surging to nearly $40 billion. But here's the thing. Abel isn't starting from scratch. Oh no, he's inheriting an immense, powerful foundation. So let's take a look at the unstoppable Berkshire machine itself. Just look at that number. Over $381 billion. Let that sink in. That's the size of Berkshire's cash pile at the end of 2025. And it's not just a safety net. In today's interest rate environment, this war chest is a profit center all on its own, generating over $20 billion a year in just interest. Incredible. And that cash pile is constantly being refueled by Berkshire's secret sauce, the insurance float. It's basically the cash they collect from insurance premiums that Berkshire gets to invest for its own profit before they have to pay out any claims. For decades, this has been the powerhouse, the engine fueling the company's growth. And now, with AI optimizing subsidiaries like Geico, it's about to become even more profitable. Beyond finance, Berkshire is literally a core part of the physical American economy. And BNSF Railway is the perfect example. It moves everything from the stuff you buy to the food you eat. It's an incredible asset, but it also faces a huge competitive threat from a potential mega railroad merger that could really reshape the entire industry. But Berkshire's biggest and maybe its most surprising bet on the future is its unique play on the artificial intelligence revolution. Because when you boil it all down, the AI boom, it really runs on one thing: massive amounts of power. AI data centers are just incredibly energy intensive. They need a reliable, expanding grid to function. So who just happens to be one of America's largest energy producers? You guessed it, Berkshire Hathaway Energy. They're making a colossal $32 billion investment to basically become the picks and shovels provider for the AI gold rush. They're expanding the power grid to meet this explosive new demand. It is a brilliant, foundational bet on the future of tech. So, with a new leader at the helm and all these massive strategic plays in motion, how are investors and Wall Street valuing Berkshire? Well, that brings us to our final section, investing in the future. This really brings us to the central debate for any investor looking at Berkshire today. Is it an undervalued powerhouse with its core businesses trading at a huge discount and a mountain of cash ready to deploy? Or is it a value trap, a company that's just too big to grow meaningfully anymore, with its best days in the rearview mirror? Well, if you ask Wall Street, the outlook is broadly positive. I mean, sure, there's a range of opinions, but the consensus price target suggests some modest upside. And the high-end forecasts, they see significant room to run, which tells you there's real confidence in Abel's leadership and the company's fundamentals. Of course, the road ahead isn't without its obstacles. Escalating trade tariffs could definitely hurt manufacturing, and that regulatory decision on a competitor for BNSF is a major risk. But the opportunities, they're absolute game changers. I'm talking about deploying that nearly $400 billion cash hoard on a massive deal, or maybe even initiating a dividend for the first time since 1967. Which brings us to our final thought. Here's what it all boils down to. For 60 years, Warren Buffett masterfully built an empire by finding undervalued assets. The question for the next era is different. With these bold moves into energy, infrastructure, and operational integration, will Greg Abel build the next Berkshire empire by actively creating value from within? Only time will tell.